starting the master budget today. And then we said that the master budget comprised of, before that, is there any trial question?
Truth, I've not even gone through the one. I've not gone through it, so you best still we can move on. So you don't worry.
Oh, okay. Okay, but I hope you have the video.
No, the one we did the last time.
Oh, okay.
Because I tried checking, I did not have it.
Okay. So let's see the question that you'll be doing today, master budget. With the master budget, it is the consolidation of the functional budget together. So, comprehensive master budget comprises of the following. So, master budget, as the name suggests, master. So, these budgets represent the organization as a whole after combining the individual functional budget together. So, one, it includes budgeted statement of profit or loss, so the P&L. Two, budgeted statement of financial position. Three, cash budget. So this is master budget. Now, the issue is that comprehensive master budget comprise of, like, add the functional budget to it. The functional budget to it. Why adding a functional budget? You're adding a functional budget because, in fact, before you can prepare these three items, you need a functional budget to prepare. The well comprehensive master budget comprised of these three, and addition to the functional budget. Yeah, the examination, you won't do that, no. Exams, this is what we give to you as the master budget. So this is the exams focus. Good. Now, let's go in and pick our first illustration on master budgets. I think I'll pick Brofrel Limited. There's a question named Brofrel Limited. I think question 10 or so. Wow. Wow, my device is really failing me.
It's raining here. Giddy, 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 giddy.
Wow. My own is a device.
Me, I'm even lucky. I charged the self line yesterday.
Yeah.
If not.
Good. So we have it now. Now let's move on with the question. In fact, all the questions are yours. You have to try them one after the other. Then we move on. Some of the questions are ICA past question, ACCA, and then other professional questions. And then my personal questions too as well. Good. So let's look at that question. Okay. So question 9. Wow, the device is failing. Good. Question 10. So this is a question that we are going to solve. Let's read the requirement and see what is there for us. The requirement says that you are required as a consultant for Brofrel Company Limited to prepare for their bankers the budgeted income statement for 3 months, budgeted statement of financial position for 3 months, cash budget for 3 months. Good. So that is it. Now we have to prepare master budget from diverse ways, but all these budgets you have to prepare it from diverse ways. So once you've done like 2 or 3 questions, they are not enough. We have to do more, like 5, at least 5 questions. So under master budget, at least 5 questions. Under class budget, at least 5 questions. That's a sure way. And the questions in this handout are more than 5 under each. So fine. So the question start. Here's the starting point. Brafre Limited retails fertilizer to farmers in Ghana. The company has approached its bankers to provide funding for next year's operations. And 3-month master budget has been requested for review by the bankers. Yes, so that is it. You have been approached by the management as a consultant to prepare the first quarter budget for the bankers' consideration for its next year's operations. Good. So that is it. Now you have been, end of accounting year, December 2014. The items are there. End of the year. So these are the end of year balances. Debtors balance up to the retained earnings. And then they are there. Good. I continue to say that the following additional information was also provided to assist your work. Note 1, depreciation is to provide a rate of 5% on cost of non-current asset. That's the depreciation, straight line. So 5%, it should be 5% per month. So 5% per month. Though as it is, it means 5% per year. If they quote any percentage, any rate without any specific details, it is per annum. So as this one, as it is in a normal circumstances, it is per annum. So use that per annum per year. But originally the question was demanding for
Per month.
Per month, yes. Originally the question was demanding for per month. Yes, so that is it. Then closing inventory is expected to increase by 2,000 in January from December's levels. This is expected to increase by the same figure in February from the projected figure in January. It is expected that in March, the closing inventory is desired to be what?
26,000.
26,000. So that is it. So the open balance increases by 2,000, 2,000 in that order. Okay, so the third note says that the company make profit of 25% on sales. It means that the gross profit margin is 25%. So you can find a gross profit, that's 25% on sales, then you are done. Good. Operating expenses. Good. Operating expenses is expected to increase by 10% from that of December. And this is projected to increase at the same growth rate to March. They'll be increasing it by 10% each and every month. Now, sales is projected to grow by what? 15% from December until March. So that is it. Now, I said that debtors figure, it desired to be proportional to the sales value. So here, if debtors have to correspond with the sales value or move in line with the sales value, any increase in sales should also correspond, or any increase in sales we also move the debtors. So it also probably move the debtors figure. So here in simple codes, debtors figures are also going to move by about 15%, which is in line with the sales movement. Good.
Okay.
Creditors value for the 3 months are expected to be as follows. So they are there. January, February, March, all of them are there. So good. Now the requirement again, you are required as a consultant for Buffett Company Limited to prepare for their bankers budgeted income statement for 3 months, budgeted statement of financial statements, financial position for the 3 months, and then cash budget. Good. Okay. So now let's go to the board and set the tone for the solution. And set the tone for the solution.
Okay.
Good.
But so the inventory.
Then
The inventory that I'm looking. Okay, so that will be at the end.
okay, so let's set a tone for the solution. Good. So we start by saying good. By saying Buffett Limited, the name of the company. So A Buffett Limited. Statement of what? Income statement then.
Yes, please.
Statement of income. Just that we don't want to contradict the requirements. The requirement says income statement for the year, for the 3-month period. So income statements for the 3-month period. For the months of good. Then we bring the months. The month of so what are the months? What month are they talking about? January, February, March, right?
Very much.
So
Yes.
January, February, and then March. Good. And don't forget your currencies. Currencies. So income statement, your sales revenue, cost of sales, your operating expenses, you are done. So that is it. So let's probably set the tone for it and then you are done. So sales. So we go straight to the question. It says sales should be what? Increased by 15%. So pick December sales and then increase it by 15 each and every month. So let's go and pick December sales from the question. And then
That's 400,000.
December sales is what?
400,000.
400,000, right?
Yes, that's for December sales.
Okay, good. December sales is 400,000. That's it. That is it. 400,000. Good.
So when it's 15%, it becomes 460,000.
Good, 460,000. So 15% of 400 is 460,000. And again, increase it again by 400 and again by 15%.
That's 529,000.
525. Then increase it by 15% again. Let me space the item so that you go there. So let me start from January here.
That's 529,000.
March. So 460,000. Then is it 568? Good. So 15%. Hello.
Yeah, I see now.
Yeah, sorry, my device or network was interrupted. Okay, let's continue.
So 529,000.
529,000, right?
Yeah, yes.
And then lastly, that increase
60
10%. That'll give us
608350.
60.
8350.
Okay, so 606350. Good. So that's
608350.
okay. 608383. That's fine. I see. 1.1555529. Oh, so 60835. So that's it. We come to the cost of sales. Cost of what? Sales.
Yeah.
Cost of sales. So let's do the cost of sales. We go and do workings and bring it back. Cost of sales. Cost of sales. Let's go and do the workings and bring it back. That's our first workings. Our first workings. So workings here. Good. Our first workings. Cost of sales. So cost workings 1. Cost of sales. Cost of sales. Good. Put the Ghana city here. You have January, February, and then probably March. Don't forget your currency. Now you know that cost of sales made up of 3 items, right?
Yes.
What are they?
Purchases, opening stock, and closing stock.
Purchases.
Opening stock and closing stock.
Okay, so open stock or the open inventory, your purchases, and then the closing. Realize your closing inventory. That's so. What do? We will go and pick this item from the question, and you probably do justice to it. So, what is the open inventory? The open inventory
20,000.
in the question.
It's
That would be the
20,000.
closing inventory for that of December, right?
Yes.
And December ending inventory is what? 20,000.
20,000.
Good.
Yes.
So it means that the open inventory here to be what? 20,000 for that of June. So 20,000. Good. Now we can probably list the closing inventory. They said that the inventory will increase by 2,000, right?
Yes.
So probably you can fill in this session. So if it increase by 2,000, here will be 24,000, right?
Yes.
22,000.
22,000.
Good. So closing inventory will be 22,000, 24,000, and 26,000 for that of
March.
March. What level is the purchases? There we are done. In fact, with this question, you can locate the gross profits, the cost of sales, any of them that you want to find, you can locate them quick. Now, gross profits. You can find the gross profit easily for this question. You can find it easily for this question. Yes. Why? Because they have given us the gross profit margin. So let's go to the question. They say the
Okay.
gross profit margin is what?
25%.
25%. If the gross profit margin or they make profit 25% on sales, it means that the gross profit is 25% of sales. That's the indication. So when we find 25% of all the sales, that's the gross profit. Have you seen it?
Yes, please.
Now, if there is a margin, if 25% of sales is your gross profit, the GP, then the cost of sales will be what? 75%. In all, sales will be 100 because for margin,
75%.
we are depending on sales. So the sales become the full. That's 100%. How we get it? So here you can find
Yes,
any
please.
of them quick. Someone will decide to find a profit and then just find the difference between the profits and then the selling price or the sales to get the cost of sales. Or you can go through this process to find the cost of sales. But any of them. Now find the gross profit for me first, and then we find the difference, represent the cost of sales before you come here to do workings. How we get that?
Okay. Yes, please.
Okay, so that is it. Wow.
That's 100.
That's
100,000.
20,000.
100,000.
100,000.
Yes.
Good.
The sales is 400. The sales is what? Oh, sorry. 46.
Yeah, so I have
460,000.
115,000.
15,000. Okay, 115,000.
Then, five,
Come
9 times point.
1132250.
Good. 250. Then 608,350 times 0.25. Wow, there's point. Let's round it to the nearest whole number. That's 15209.
209.
2088, right? Good. Now you can
No,
also,
209. Okay, yes, correct.
good.
Sorry, sir.
Then you can also find the difference between this and that of the sales. That will give her the cost of what sales. How we get that? That's the cost of sales.
Yes, please.
So the difference between 460,000 and this is the cost of sales. Or you can also use percentage. Cost is 75%, so we just multiply by 75%. So if you multiply by 75%, to give you the cost of sales because you're using margin, which will be different from the markup. So what should we subtract from 460,000 so that we can get what? 115,000. So we have to subtract
115.
Okay, so 460 less 115, or that's 345,000. That's the cost of sales. Or we can also just multiply this by 75%, and then all of them give us the same answer. Now let's move on to the February own. February 529, 529, and less
396.
That's 132.250. Good. So
396,750.
good, 750. Good. So that's the cost of suits. Now let's move on to this. So this one, it will be 608,350 plus 152,088. That's 456, right?
Yes.
456,262. So 262.
Yes.
Good. That is it. Okay. Now, have you seen that we find the cost of sales?
Yes, please.
Good. And then the gross profit too. Now let's fill in
Yes.
this space so that we may need some of these figures. Now we can recopy the cost of sales here, which is the 75% of the sales revenue. The 345,000. And then here too is what? 396,750. Finally, 456,262. Now, closing inventory here becomes what? Open inventory for the next period. How we can see the board?
Yes.
Good. I think the rain has started here. Let me see if I can do something about the. Okay, so now we can continue. So closing inventory here becomes what? Open inventory. So we can fill in. So here will be 22,000, 24,000. Then we are done. Now, the issue is this. What left is the purchases. Now, this purchase figure, we cannot get it until we strike averages or we strike differences. So if you want to get a purchases figure, just find the difference between the cost of sales and these two figures. So 20,000 minus this to give us negative 2,000. So the question is, what figure that when we add to this figure, after subtracting this, we get this cost of sales. So the balancing figure, then you are what? Done. So find the middle. Find the basing figure. This one is copy and complete. So what do you get?
Okay, I'm coming at 20,000.
Good. So the first one, 347,000.
Please, the closing balance for the journal is what?
Good.
22,000.
So the first one will be 347,000. Yes. Good. Followed by, yes, 2,000, right? But all of them is 2,000. Increase inventory.
Yes.
So you add 2,000 to this. So 398,750. Good. And then here to be
The same.
458,260. Kindly confirm that figure. And then all of them.
Which one?
He said?
Which one should I confirm?
But all the pages is the one that are they
Okay,
correct?
okay. Yeah, the first one is correct. The second one is correct. The last one I have to check.
Okay, so that is it. So these are pages figure. So in fact, you can just go straight and do this and work on this one. Yes. Just that you may need figure over here. We need the pages figure for subsequent calculation. Okay, now let's see. Let's continue the journey. From gross profit, we move on to operating expenses, right?
Yes.
Now, operating expenses, they say to increase by what? 10%. Operating expenses will increase by 10%. According to note, according to note
Note
4,
IV.
yes,
Yeah.
that's the operating expenses expected to increase by 10% from that of December, and is projected to increase at the same growth rate as the 10% toward March. There was operating expenses for that of December. December's operating expenses amounted to 48,000 or 60.
60,000.
Oh, that's 60,000. So 60,000, when you increase it by 10%, that would be 66,000, right?
Yes, please.
Good. And then when you increase it by 10% again, 66, that will be 72,600, right?
600.
Good. And then another 10% increment. That's 1.1 by
79,860.
He said
79,860.
so 79860. 7960. So let me see. I think I didn't hear you well. So 72,600 by 1.1. Good. So 79,860. 79,860. We take it off. Then what again? Depreciation. This operating cost, it does not include depreciation, so you have to charge depreciation. How do you know? How do you know that this operating cost does not include depreciation? Yeah, they've separated the depreciation for us. Yeah, so that is it. So depreciation. And here, assuming that in the question, in fact, in this question, they quoted was 5%. It means per annum. So
Yes.
when we are calculating the depreciation, all what you have to do is just find 5, divide this one by 100 because we are doing 1 month. We are doing month by month. So what you do is we divide this one by 12 before we multiply, or we will multiply it like if the cost is, let's say, 200,000, that's the cost of the assets. We multiply this, then we divide this answer by 12 because this the whole one is what? Yearly. Before we finally convert it into what? Into months. Good. So take note. So originally, this is how the question, this is how we are going to solve the question. Good. So originally, this is how the question is supposed to be, but it's per month, 5% per month. So take note for me. Now, what is the cost of the non-current assets? So 5% per month on the cost of non-current assets. So checking the cost of non-current
6986
69.
600.
Good. So that's the fixed asset at cost 698. Good. So that is it. So here depreciation will be 5% into brackets. The 5% times 698,000, and that will give us
Times 5%. That will give us 34,900.
34,900.
900.
Good. So that is it. That is it. So 0.05 by 698. That's good. That's good. Good. Now 34,900. Here record the full amount. 34,900. But take notes that if that 5% is there like this, and after getting this 34,900, we have to divide it by 12. Yes. But here I've inserted per month in a question, so I've secured myself here. Good. Is there any tax in the question?
Tax. No.
Is there any tax? No tax, right? Good. So let's get a profit. So this is the net profit, and that's the end of the profit or loss. Or there was wages and salary.
No.
They have wages and salary and any other expenses there? No. So that's all. Good. So basically we are done. So have you seen how nice and interest this can be? But not all questions. Not all questions. So what's the net profit? Assuming there is tax, if there is tax, then this one becomes profit before tax. Net profit before tax. Or just profit before tax. So they remain the tax. You find the tax and get the net profits. They'll probably give you the tax rate of, let's say, 20%, 25%, but do not assume any tax rate when not given. So that is it. So net profit. Okay, so the net profit will be the gross profit less the operating expenses.
Yes, please.
So you have 115,000 less 66 less 34,900. So 115.
14,100.
That's 14,100, right?
Yes.
And that's the end of the game. That's the end of the game. Good.
Hold on, no. This is for just January.
Yes, that's for January. Then we continue. Okay. That's of what? February.
February.
Then February will be.
Okay.
February
is
1, 3, 2, 5.
February is 24,750.
24,750. 750. Then what about March?
March is 9,860 34 900. Okay, so that's 37,328.
Good. So 37,300
328.
328. Okay. So that is it. 88 less 79860 less 34 34,900. So that is, hey, the answer is giving me wrong. Oh. My answer is wrong.
Hey, hold on.
Come again with your answer.
Hold on. Please, the gross profit is 152088, right?
152088 less
Minus
79860
less 34,900
Good.
and 37328.
Good. So that's right. 328. Okay. Then that's the end of the income statement. Very short, straightforward. Now what I'll do is I'm just going to put one note. Profile Limited pay tax at the rate of 20%, 25%. Let me see. 20%. We'll not pay this guy. 16. We'll not pay this guy. We'll not pay this. Like 8 times 20. 8 times 20. Okay, that's 1.6 here. So affect it. What about 0.5? So let me see. I don't get much. So 0.25 times 8. Good. It's 25%. Profile Limited pay tax at the rate of 25%, but pay tax 1 year in arrears. 1 year, so 1 month in arrears, not 1 year. Pay tax at the rate of 25% per month. 25%. I'm just assuming 25% per month, and it's 1 month in arrears, like month in arrears. Good. So that will be your version. So you try that one for me. Good. Now let's move on to the statement of the financial position and then the cash budget. Then we are done. Okay. Kindly note these figures. I'll request for them. Okay.
Which ones?
I think.
Which ones? For the workings, I've not copied it. I've only copied the other one, the answer.
Okay, so you can jot down the work for me. Okay, so that is it. Okay, so B. So Profile Limited. So Profile Limited. The name of the company should be on top. Profile Limited. And statement of financial position. Statement of financial position. Financial position as at the end of month. So as at the end of January, February, and March. Good. So that is it. Please, do you hear the background noise?
No.
Okay, so that is it. Now let's probably move on. I did the working here. Now, where do we start from? Financial position. As usual, don't forget.
I finished.
You said?
I finished the copying.
Good. So let me see. Okay, so we will start from the non-current assets. So non-current assets. Just that they call it the fixed assets. So I will probably write the fixed assets there. But this is management accounting studies. So the fixed assets for Buffer Limited, fixed assets. Now, when you pick the fixed assets, you bring the costs and then the accumulated depreciation. So probably into bracket costs. So this is the cost. And then the accumulated depreciation. Though I'm not allowed to show it on the face. You can probably go and do working somewhere and bring the solution in. Yeah. So that is it. I think I'll do the workings and bring the solution in. I'll do the workings here. I'll do the workings here. So let me take this section off. So workings number 2, the fixed assets. Workings 2, fixed assets. So the workings on the fixed assets. That is it. Oh, sorry. Now we will start by January, February, and then March. What we need the cost of a fixed asset. So cost, accumulated depreciation, and then the carrying amount. So the cost is for 698,000, right?
Yes, please.
So 698. And it's going to be the same throughout. Accumulated depreciation. We just have to add the depreciation for a month, each month, to the previous year accumulated depreciation. Now, when we go to the balances extracted, we can see that the open balance of the accumulated depreciation is 98,000. Accumulated depreciation is also called what? Provision for depreciation. So the figure here is what? 98,000. So that is it. Good. So here, open balance is 98. We add plus the 34,900.
34.
So that is it.
Yes.
98,000 plus the 34,900. That will give us the
132,900.
So plus 34.9, and that's 132,900. 132,900. Then we take it off, and then we add in. When you go to the February, just add 34. Add another 34.9 to it. And then it will give
167,800.
7,800.
800.
And then we add another 34. Add another 34,000 to it. 34.9 to it. And then you have
202,700.
202,700.
700.
Now let's find the carrying amount or the net book value. Now the net book value will be the cost less the accumulated depreciation. So that is it. So cost less accumulated depreciation. The cost of the asset less accumulated. So here the carrying amount will be 698,000 less 132,900. That's 565,000. 565,000, 100. In fact, you can just be subtracting it less 34,900. Simply, it will give us 530.
200.
That's the answer for this. That's a shortcut approach. Oh yes. 200. In fact, another less 34,900. Good. That will be 495,300. 300. Good. So that is true. So these are the current amount. So we come here and write fixed assets on the face. So let's send it to the face. Fixed assets. Into brackets, workings number 2. So take note, that's the workings number 2. Now it will be 565,100. So 565,100. 530. 200. Then finally 495,300. 495,300. Good. Then we go to current assets. Current assets. Now the current asset is made up of 3 items. Good. So that is it. Now the current asset is made up of 3 items. What are they? The inventory or the stock? Let's see the one that the examiner used here. So we do the same thing for it or for him.
Current assets.
So you can see December ending inventory. Good. So they use inventory. So that is it. Okay, so inventory, receivable, and then cash. Here there will be danger. Now we know the closing inventory, right?
Okay.
Yes, we had 20,000, we added 2,000 to it from the cost of sales calculation. The closing inventory was
it's 26,000
here. And then we had
24,000. 4,000.
24,000.
4,000.
And finally 26,000. Good. The receivable. Now let's go and do the receivable. Now with the receivable, we have to increase it by 15%, or the debtors. That's the debtors figure. They said that the debtors or the receivable will move in line with the sales revenue. So it means that when the sales increase by 15, debtors figure to also increase by what? 15. So that is it. When the receivable increase by 15, the debtors figure to also increase by 15%. So that is it. So let's go and pick the first debtors figure and be increasing it by 15%. So debtors figure is 23,000. First item on the screen, 23,000. So we have to be increasing this 23,000 by 15%. That'll be 23,000 times 1.15. That's 26,450. 26,450. Just multiply it again by 1.15. So here 26,451. Oh, sorry, I added though. So to be 26,450 by 1.15. Good. That's 30,417 dot what? Dot 5. So 30,417.5. Good. Now we can run it to the nearest one number. So 30,418. Let's run it. 30,418. You can maintain it. You can maintain it, and then it'll be fine for you. Then the next one will be times 1.15, and that's 34,980. 34,980. So 34,980. Good. So that is it. 34,180. 34,180. Good. Okay, so I hope you get it.
Yes, please.
Good. Now, when you go to the cash, there's a danger. Before you get the cash, you have to prepare what? The cash budget. The closing balancing for the cash budget. That's what you're going to set here. So here, what do? You leave it empty for now. Leave it empty for now until we are done with the cash budget. You cannot determine the cash balance, or unless you strike average. But I will not advise that. So let's go to the equity and then the liability section. Equity and liability. Then after the equity and liability, we will pause and come and prepare the cash budget. So the final answers that we are going to determine in the cash budget, that's what we are going to put here to balance it out. Good. So now let's see. So this is total assets. Total assets. For total assets, it will be the non-current asset plus this plus that. I'll give her this. But for now, because of cash, we will leave it empty. Then move on. Now let's go to equity. 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 So let's go to the stated capital. Stated capital. Stated.
So I can't see anything. No, the screen is blank.
It said.
Hello, sir.
Yeah.
The screen is blank.
Good. Okay.
Hello, sir.
Yeah. I'm here. But
Okay. Oh, okay.
is the screen okay now?
Yes, it's okay. It's okay.
I don't know why it's behaving like that. Is it okay now?
Yes, please.
Good. Okay. Then we will continue. Stated capital. Now with the stated capital, we won't give it to you. You have to find it yourself. Stated capital, you have to find it yourself. Capital with K, right? This is in our query. Now let's go and calculate the capital. We use the statement of affairs. Just prepare quick financial position. That one you use only open balances because you want to know the open balance of their capital. So how do you get it?
Okay.
You know that.
So I want to ask a question. So meaning that I'm asking if there's another way. Meaning that if you're able to calculate you're able to get the cash budget, that means there will not be any need for working the stated capital, right? By using the statement of affairs.
Please come again.
I'm saying that if you're able to you're able to solve the cash budget, meaning that there will not be need to use the statement of affairs to find the stated capital. It's a question.
I can hardly hear
because
you.
I'm thinking the cash budget. I'm saying that. Can you hear me now?
Yes.
Okay. I'm saying that if we get the cash budget, we can get the total assets, which would then give us the answer for the capital. That's another way I'm asking. Is that also possible?
It's possible, but that's that approach. No, we will.
Okay.
We won't go for that because what
Okay.
if the cash budget is wrong? Or what if there's an error there? It will proceed here too. But it's so easy to find the stated capital. So easy.
Okay.
It's so easy to find the stated capital. Now, how do you get it? You list all the assets. But all the assets, one side. Because if you want to find equity, equity is equal to, if asset is equal to equity plus liability, now equity is equal to asset plus liability. Just that this equity,
yes.
One is stated capital. So you have to less and retain earnings, other components of equity. Other components of equity. You have to less it from it. That will give us what? The equity itself. Good. Or the capital.
Okay.
So that is it. Now let's list all the assets. Yes, that here you have to pick the open balances. So here's the capital at start of the year or stated capital at start. So capital at start. Now capital at start as at January. We have to use December's balance. December's capital will be the open balance for that of what? January. And probably should be the same because stated capital is the same. And so you tell you probably this year's or change your probably add more or reduce some. So that is it. I start by saying assets. Here, don't do any classification here. No classification, just list all the assets. Now, all the assets, it will be all the assets. We start from.
We have debtors,
asset, right?
Debtors. Yeah.
With the fixed asset to take the cost 698,000, less the accumulated depreciation of 98. So finally, we have what 600,000.
Okay.
Then you add your inventory. The inventory balance was 20,000. You add your debtors, the receivable. Nope.
Yes.
This was 23,000.
23,000.
Cash. Now what's the cash?
Bank 55,000. 55,000.
Good. Bank is 55,000. That's the bank balance. Okay, so 55. So bank, so they say bank, so you have to also call it bank balance, then debtors. So bank balance is 55,000. That's all right.
Yes.
Then you put them together. So 600,000 plus 6. Oh, so to give us 698. Wow. I like the question. 698 minus 98 give us 600 plus all these two giving us back. Now let's go and then probably take off
Okay.
one, the liabilities, all the liabilities, and then the other component, and then the retained earnings as follows. So let's the liabilities. So what are the liabilities we have? So the liabilities are the creditors,
Credit.
the other ones.
Yeah, payables 48,000.
Good, creditors balance or the payable 48,000. So payable 48,000. And then let's the retained
And
earnings. Retained earnings.
120,000. 120,000.
It's 150,000.
120.
Good, so
120.
120,000. So this is the open balance of the capital. So that will be 698 plus 48 plus 120. That's 530,000. Agreed.
Yes.
So that's the capital. So that's the capital at the start of the year. So in fact, now that we know that the stated capital is 530, then we call it all. Then we call it all. So here, when we come here, we will have something like 530 throughout. 530 throughout. 530 throughout. Then we go to your retained earnings. Retained earnings to you bring the open balance of 120 and be adding the year's profit to it. If there's any dividend, you less. Yeah, there's no dividend. So we will be adding the profit. So the profit for January is what?
The profit for January is 14,100.
Good. So plus the 120,000. So 120 plus the 14.1.
100. That will be 134,100.
So 134,100. Then we'll be adding. What is the profit for February?
24,750.
134,100 plus 24,750, right?
Yes, please.
Then what do you
And
get?
that is 158,850.
850, right?
Yes, please.
Good. Then the last year,
196,000.
the profit is
178. 196,178.
196,000.
178.
178. Okay.
Yes.
Good. Now what's the closing balance?
Closing balance. For March, it's 72,6178.
72,000.
726,178. 726178.
Okay, so the next one.
And the next one is 688 850.
It's 6, which one? February, right?
Yeah, February. 688 850.
Good.
And then January is 66 for 100. Yes.
Six
For 100.
Say 6 for 100, right?
Yes.
Okay, so that is it. So that's the total of equity. How do you get that?
Yes, please.
Okay, so now let's probably move on to the liabilities. So let's go to liabilities. Good. Now the liabilities. We have a long-term
I have
liability.
payables. No. This is a short term. So we have payables.
Oh. Hey, what is coming over? Sorry.
Easy.
Mm-hmm.
January is 50,000.
Payable. January 60,000.
50. February is 46.
46,000.
Yes. And then March, 52,000. It was given. All of them were given in the last note.
Yeah, it was given. Is there any other liability?
No.
Is there?
No, sir.
Oh, okay. So if there's no other liability, then we can probably go ahead and then finish it. Good. Now what's next?
Find the total, and then later go and work for work the cash budget.
Total. Okay, so that is it. So total equity and liability will be what? This and this, this and that, this and that. Good.
January is 714,100. 714,100.
Okay, then February.
February is 734,850. 34,850. And then March 778178.
77.
778,178.
Sorry.
778,178.
Okay, that's fine. Okay, so what level is the cash budget for us to get these balances? But like you said,
Yeah.
some people will just find average. You put the same figure here, the same figure here to fill in this bank, they are done. Okay, so let's prepare the cash budget. So that
When time is beating me, if time is beating me, that's what I'll do.
But just that you will know. Sometimes they will know. Yeah, sometimes they will know. Now let's go to the cash budget.
Okay.
Workings, no, this is not workings. It is question 3. The third requirement. So 3. So Profile Limited. The third one is question C. As the cash budget. So still we have the 3 months, January, February, and March. Okay. Then we start by saying, I see the cash budget, your receipts. Cash budget, your receipts. And then your payment. You list all the receipts there. Now here in this question, give me examples of receipts in this question.
Example of receipt. Hold on, sir. I'm looking at debtors.
Okay, so that's the cash received from customers. Cash received from customers.
Yeah. Yes, please.
Cash received from customers. Let's do that workings here. Workings. Workings number 4. So cash received. The cash received from debtors or customers. So January, February, and March. Now this, if you probably are aware of sales ledger control account, for you do help us to do that. The sales ledger control account. How we get it?
Yes, please.
Now what you do is this. But use a shortcut approach. The open balance. Balance. Add a credit sales to it. Credit sales. If there's no credit sales, use the total sales. Then less the closing balance. You are done. So what's the open balance of receivable debtors? That's 23,000.
23,000. Yes.
What's the sales for that year? The credit sales. If there's no credit sales, use the total sales. Sales for that year is
Okay.
what? 460,000.
Yes.
How we get it?
Yes, please.
And then the closing balance.
Okay. The closing balance was, hold on, sir.
Closing balance for January is what?
26, 450.
So 26,450. Let's use at the start of the year, 23,000 people were owing me. I give them proof of 460. So at the end of the year, how many of them still owe me? So it means that when we take it off, that's the answer. How do we get it? So
Yes,
what's
please.
the answer for January?
Say, hold on. Oh. I'm coming on.
Good.
Okay, so you get 456 550.
456
550.
550.
Yes, please.
Okay, so February 2, closing inventory becomes open 26,450. Plus the sales for February. What's the sales for February?
Sales for February is 529,000. Yes.
The closing balance for receivable.
3418. 3418.
Okay, so 3418. Then you take it off.
And then
this one becomes open here, 3418. So add year's purchases to it and pick the closing balance of it. So we add that.
I had a 524432.
Is that
524432.
524
432.
52443.
Yeah, 432.
Okay, so 432. Can you give it to me again?
Okay. 524432.
Okay, so that is it. And then what about the last year? This one we can open the closing balance. For that year,
Closing balance is
608 350. Closing inventory for that year is what?
34.
34.
Sir.
Yeah.
Sir.
I'm here.
What I did was the February is wrong.
The February is wrong, right?
Yeah, I made a mistake.
Okay, so that'll be 26450. Let's see, plus 529,123. Let's
So
30.
it should be 525.
418. 52 and 32, right?
It should
52,
no, it should 5250 and 32.
So now let's do the last year. That's the last month, last
Okay.
period. Good. Now this one is 34,980.
Yeah, so had 603788.
60.
3788.
So that is it.
Okay.
So let's bring them here.
I have no idea of this. I have no idea of this working. This is my first time.
Okay.
I'm saying I've not seen this working before.
Okay. That is it. And this is one of your past questions. So here we'll bring it here. Why are you? You can use the control account to do that. So 456550. But if I don't create space for them, it will January, February, then March.
You can clean the other part. I've already copied.
Okay, this session.
Yeah, I've copied already.
We will come and balance it with the cash.
Oh, okay.
So we have 456550. Then we go to 525 and 32. Lastly, 603,788. Good. Now this is a cash. So now get this one, let me take it off. That's all. That's the total for the receipts. But here, that's
you can clean it. I'll look at the video later, so you can clean it.
Then you go to payments. First, cash paid to suppliers. Cash paid to what? Suppliers. Let's go to the working.
Suppliers.
That's working is number 5. Cash paid to suppliers. Cash paid to suppliers. Have you seen the cash budget that we did for the first time? Abigail Champ, ma'am. How we got the cash received and cash paid is totally different from this style, right?
Yes.
Yeah, so that's the dynamics in the question. The principle is the same, but how you get the figure keep on change. Now, so cash paid to suppliers. So what we do is that one to still the same show. We follow the same approach. January, February, then probably March. I'll clean this session. It's creditors or payable. Now, with the cash paid to supplies, the same show, open balance. What will happen before you owe your suppliers or before you pay? You purchase on credit, so that's purchases. So the purchases figure, the one that we calculated, this we are going to use it. Less the closing balance. plus the closing balance. So give me the open balance of the payable. Is there? Good. So 50,000. 50,000. Let me see something here.
No, that is not the opening balance.
Good.
It is.
Like
It
that.
is
So what will be the open?
48,000.
Good. So 48,000. And then the closing 50.
Mhm.
Then 46,000.
46,000. Yeah, and
And
then
finally
52,000. 52,000.
52.
Yes, please.
Okay, so closing here becomes open in that order. Becomes open. Now, what is the purchases figure? Purchases for
But yes, for
from
January
the
is
first working that we did, working is 1. It was
34,700,
347,000, right?
and yes,
And then this one was
398,750.
398,750. Good. Lastly,
And then 458,262.
4,
58,262.
262 like this.
Yes,
Good. So that is
458,262.
458,262. Good. So
Mhm.
that is it. Now, what's the cash? Hey, why am I putting in bracket? It's supposed to be first figure. We add. No bracket to add.
Okay.
No bracket to. So you only subtract the closing balance and then you are done.
The January is 34,000. 344, 45,000, 345,000.
Yeah, 345,000. Wow, that's the gross profit. That was the cost of sales, 345,000. That was the cost of sales. So, and then
Okay.
here,
And then that's it.
yes, 4,000, right? 4,000. So 402,750, right? That's so.
3,987. I'm now subtracting coming.
Okay.
So I had 402,750.
Yes. And here's the difference of 6,000. The other way around. So you have to take 6,000. So 4, 5, 2, 6, 2, 6, right?
Yes.
4, 5, 2, 2, 6, 2. Good. Hey. What have I done?
458. It's
4, 5.
458,262.
Okay, good. So bring them here as workings. Workings number 5. So workings number 4. So 4 and 5. Here is 3, 4, 5. 402,750. Then finally we have 452. Let me clean the F here and write it here. 262. 262. Good. Then that is it. So what again? Expenses, cash budget. The cash budget prepare. It's the same cash
Mm.
budget, but the expenses paid, payment, expenses paid, wages and salary, and then any other. Don't forget that if it includes any non-cash item, knock it down. Yeah, thank God the
Okay.
depreciation was on its own. Depreciation was on its own. So we're not going to bring depreciation. So bring the expenses.
Okay.
The
So they
expense,
say operating expense for the month of December is
the operating expenses, we
the
had 66,000, right?
yes,
We had 72,600.
600,
And finally we had
79,860,
70,
9,860.
860, right?
Yes.
Good. So that is it. Okay. Then, is there any other item?
No.
No. So get a total for that of. I down this session, so I take it off.
Oh, you can clean it.
Good. So basically, we are done. So 66,000. Putting it together. So total payment. Putting this. That's 411,000, right?
I can't see properly, so you do the calculation.
Okay. Oh, sorry.
The figure there is 34,500, or the cash paid.
It's 345,000.
Hello, sir.
Yeah.
The January cash paid is 345,000, right?
Yeah. 345,000. Good.
We are having 411,000. Okay, 411,000.
Is it okay now?
And February, yes. And the February is what? The cash paid.
Cash pay is
The figure
402,750.
402,750. Plus 72,600. Okay, so 475,350.
475.
350.
Let me see the arrangement. Let's go up. 475,350. No. Okay. And the last one, 452,262 plus 79,860.
79860. Please, the cash paid is what?
Cash paid is 452,262. So 452,262. Good.
You're having 532,122.
532.
122.
532,122. Good. Now the surplus deficit. So surplus back what deficit.
The deficit.
Yeah. Surplus like deficits.
So four, 5, 6. So I hope I'm giving the right figures.
4.
No. I'm saying the cash receipt.
This less this.
Yes, the figure at the top is 456, right?
Yeah. 456. 550.
550. minus 411,123. So we having 45,550.
45,550.
50.
Good.
550. Okay.
Wow. So the 5 are plenty.
Yeah, there are 3.
Okay, so that's fine.
Okay.
And let's go to February.
February, please, the cash receipts.
The cash receipt is, let me check. Good. That's 525032. 525032.
Minus 475.
Yeah.
350. So you are getting 49,682.
So 496.
82.
Okay, 618, right?
No, 682. 82.
680.
No, 49682.
49682.
Yes.
Okay, I'll take that. Then this one is 306. Sorry, 603,788.
603,788.
788.
Minus
532.
532. 122.
Yes,
So I'm getting 7.
Then
71,666.
71. Okay.
666.
Good. So that is it. Now let's see. Let's bring the open balance of cash. Now when we add, we get a closing balance. So what was the open cash balance? That's the bank balance. It's 55,000, right?
Yes.
Good. So adding it to it, what do you get? The closing balance.
Okay, 55,000 plus 4. Okay, I'm getting 100,550.
Good. So that is it. Then you push it as open balance here. Then
Plus, you get 150,232.
And finally, you push it here.
You get 221,898.
221.
898.
898. So now we are done. Left with the balancing. So let's go to the main financial position. The main financial position to insert the figures and then probably we are done. Okay. So let's put the figures in and see if to balance nicely for us. Wow. So the closing cash balance, though I've cleaned part of the financial position, our financial position start from here and coming down. Good. So our cash balance for the January is 10550. Good. 10550. Good. That is it. Then the cash balance for that of February is 152,232. or 150? It's 15032. No, it's 232. Good. Lastly, 221898. Good. So that is it. Now let's move on. So now balance it for me. Now that we have all the figures in, can now balance it for me.
January 714,100.
Good, which is the same as this one, right? Because the down parts, the 7
That's for January.
100, right?
100.
Good.
Yes.
Now let's move on to February. February 2 will be adding this in that order.
It's 15022, right?
Yeah, 150.
So the cash for February.
It's 150232.
2332. Okay. So that one is 734,850.
Okay, so 734850. Good.
Mm.
Then lastly,
The last figure, the cash is 221 for March.
221898.
Okay, so 778,178.
So 778178. So that's
Yes.
the master budget, and that's the end of the game. So you can see that our total assets should be equal to total equity and liabilities.
It's
Nice.
like the master budget has everything in it.
Yes, best master. It is a corporate budget. You have everything. In fact, the computation, if you want to start from the scratch, you start from the functional budget. So that is it. So that's the end of budget journey. Our next topic will be on variance.
Variance. Okay.
Yeah, standard costing and variance analysis. That's our next question. But before that, the remaining questions are yours. I have one question B. That's November 2014. November 2014. That question is yours. I think I have that question here. Yes, this question. Kindly do justice to it for me. Question 9. That is a master budget question. You are required to prepare the following budget for 2014 financial year. Monthly cash budget for 2014. Budgeted income statement for 2014 and budgeted statement of financial position for assets that fell in 2014. Yes. Monthly.
So this is like from January to December. Okay.
Yes, monthly, January to December. So you say the management of Cash Point Limited has prepared its functional budget for 2014, and the management accountant has gathered the following information for the preparation of the cash and the master budget. So that is it. So that's your question. Kindly do that one for me, and then the remaining ones are yours. So you try the other ones in them. There are more in it. Okay. So thank you This is how
Thank
far
you,
the
sir.
good Lord will bring us. So,
Okay. Thank you, sir.
you're welcome.
Okay, sir.